Good morning, everybody, and welcome to the Daily Energy Markets podcast, where we see Brent crude oil trading at close to $91 a barrel and WTI at close to $86 a barrel. The outlook for this morning has been a move upwards after yesterday, essentially. No change to a little bit down after the big news over the weekend. The market slowly absorbing the developments, and the current outlook seems to be lifted by what will Israel's reaction be, next step in this chess game. Ali Al-Riyami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Muscat, Oman. Ali, your thoughts of where we're at 48 hours later?
I think, thank you very much. Good morning, Sean, and Eid Mubarak to everybody. I think the whole situation since the beginning, since the Israeli attack to the consulate in Syria, and then the reaction from Iran after almost like 1 week after that, it has really played a big role to include the premium in the price. So this delay of reattack from Iran, it did play a big role to what we see now at the moment. But I think also the other thing is that the revenge, if you can call it, from Iran to Israel day before yesterday, also it wasn't that big, and the world was expecting that to happen anyway because of the time that it took until the retaliation happened. So the whole situation, I think it was seen to be mild rather than a big impact on the region. But now we are talking about another revenge, another retaliation from Israel to take revenge, let's say, to what happens. And this also now it has an impact. We have seen today the prices went up because of yesterday's meeting in Israel. The cabinet met yesterday, and they are discussing about attacking Iran. I mean, if this happens, then I think we may see some more things go out of control, especially from Iran. What Iran will do later on, nobody knows. If that's going to be another impact, is that going to be a bigger event in the region? At the moment, it is not very clear. But thank God that we have Joe Biden is trying to talk to the main players in this crisis, and to try to cool down the things. Will he be successful? I mean, we don't know. I mean, but the statements from United States shows that there are some indications that they are not going to be involved if Israel decided to go ahead with any kind of missiles or bombing or whatever.
Further escalation, really.
Rather escalation, yes, indeed. So let's wait and see until we know exactly what will happen the coming 2 days.
Let's welcome Ole Hansen, Head Commodity Strategy at Saxo Bank in Denmark. Ole, all the drama, clearly, I mean, we talk about the doomsday scenario for the oil markets is something that we're witnessing unfold as we ratchet up the escalation. But yet all financial markets seem to be oblivious to these developments in the Middle East. How do you read the reaction, not just of the oil markets, which has been relatively sedate, but all financial markets? It's business as usual this week.
Yeah, more or less, you can say that, Sean. I think what we are seeing in terms of other commodities is most certainly that underlying bid we're still seeing in the gold market and silver to a certain extent as well. completely going against normal macro trends, because what we also have been seeing recently, the dollar has strengthened. We're seeing yields picking back up in the US, simply because the strength in the numbers coming out of the US continue to overwhelm expectations for rate cuts, so yields are moving higher. And against all this, we're still seeing precious metals moving higher. So that market in particular, I think, is sending a warning sign that all is not well. And it's not just on the geopolitical front. There are other trouble spots right now as well, which basically drives investors into the metal. But you're right. The overall market seems to take it fairly calmly. We did see some weakness in the stock market in the US over the last week or so. That extended again yesterday. The techs are selling off, but that's probably more in relation to the fact that these yields are potentially going to stay higher, interest rate higher for longer. And that's somewhat dampening the outlook for stocks at this point in time.
Neil Atkinson, former head of Oil Markets Division, International Energy Agency. Neil, is this an oil price that is packed full of geopolitical risk, and so hence it doesn't need to react? Or is it one that is, somewhat nonchalant on the back of, well, we've 6 million barrels of idle capacity on the sidelines, no stress here? Your thoughts on those fundamentals?
Well, I don't think the oil price is packed full of geopolitical premium, actually. I think that as far as the oil market is concerned, the terrible events in Israel and in Gaza and the Iranian involvement now, they're terrible things. But as far as the fundamentals of energy supply are concerned, they've had little direct impact. Obviously, there is the disruption caused by the Red Sea attacks on shipping in the Red Sea, sure. But ultimately, the oil market continues to function pretty well as normal as far as supply and demand is concerned. And I don't think, to go back to Ali's very terrific phrase about this is a chess match, I don't think all the analysts looking in from the outside believe that any of the players in this chess match, and perhaps stretching this a bit, there are 3 players in this chess game. You've got Iran, obviously, you've got Israel, and of course you've got the United States. None of those players want to see the kind of escalation which is going to lead to something that you could classify as a war. And certainly the United States does not want to see any disruption to global oil supplies, because it's election year, and they wouldn't want to see it anyway, but it's election year. So what's driving the price fundamentally is the fact that the OPEC Plus supply agreement has succeeded in holding off from the market significant volumes. We see relatively strong demand growth this year, despite the fact that my friends at the IEA cut back their estimate of growth last week, but fundamentally fairly strong demand. And that is supporting the oil price, and the price has been creeping up in recent weeks rather than sort of jerking up on the back of overnight geopolitical events. So we have a situation where the price has risen. I do not believe there is a significant geopolitical premium currently in the price. And if anybody believes that there is, I'd be interested to know how much they think it is, and I'd also like to see their workings.
Ali, obviously there's many stakeholders in this ongoing development, and the obvious protagonists, Iran, its proxies, and Israel. Where do we stand in the Gulf on this? A lot of different reporting over the weekend of, getting involved, being on the sidelines, supporting, quietly supporting. What's at stake, and how engaged do you think the rest of the region is in resolving this crisis?
Well, actually, I think there is a mixed feelings in the region at the moment. If you take the Gulf states, I think a majority of them decided to keep silent and not to be seen that they are taking any positions in other way, except maybe Oman. That's the only country that they have hosted, the foreign minister of Iran before the attack, and they were trying to work as a mediator in this situation, and also to send some messages from Iran to other, to other countries, alliances in Europe and also in America. Rather than that, I see nobody it's willing to do anything at the moment. They're just keeping silent and see what will happen. I don't see any kind of interference from either Saudi Arabia or UAE or Qatar or anybody else. But if you go further north to Jordan, Iraq, I think these are the countries that they were very much involved the last few days. From Iraq, we saw some, maybe some attack from the proxy, militants in Iraq. Jordan, we heard from the news that they have been, heavily been involved on attacking or also shutting down the drones and some missiles. So rather than that, of course, we have the situation in the Red Sea, which is going to continue.
On that point of the Red Sea, which is the Red Sea, where the Houthis in Yemen are targeting shipping through the Red Sea, and the reason that they have given in recent weeks and months is in support of the Palestinian situation in Gaza, the ongoing could be considered genocide, as the International Court of Justice has described it. That clearly has its connections to the situation in Gaza. Is this a separate event that's been going on for years? Is this tied into Gaza, do you think, and the resolution is through Gaza, or is this a completely separate corridor?
Is that question to me?
Yes.
Well, this is. I mean, the situation in Red Sea was very calm before Gaza or before the Hamas attack to Israel, and also the revenge or the escalation from Israel. And then they started, supporting Gaza, and the whole thing started from there. But I think, and this, by the way, this is continued. This is nothing to do with the attack that happens few days ago from Iran or from Israel. This is something that to support Gaza, and also this is what they have. This is what they see, that what they are doing at the moment is supporting Gaza. I don't know if it is that is true. Is that okay or not okay, or it is true or not true? That is something that to be discussed later.
I suppose it's one of the questions we're going to have to think about as to whether this current escalation between Iran and Israel can only be calmed down through calming down Gaza, or are all these fires separate? Ole, meanwhile, back in your neighborhood, of course, one of the big impacts on the recent elevation in the oil price has been Ukraine's attacks on Russian energy infrastructure, and particularly the refining capacity that has been damaged in recent weeks. It looks like the Russians are getting on top of that. What's your outlook for that and its impact on oil prices, and the possibility that this becomes actually a greater point of combat around energy infrastructure for the Ukrainians?
Well, we just seen last week Russia's counter-attack, hitting some of the natural gas storage sites, and that's driving up gas prices in Europe. So I think there's probably some concerns both in Europe and the US that these drone attacks on Russian facilities inadvertently helps drive up prices for energy. And as Neil mentioned earlier, that's not really something that is we'd like to see at this time, especially not in the US either. But it has tightened the support a further tightening of the product market, and just adding to the underlying strength that we're seeing across the energy market. So whether it will continue, I have my doubts. But then again, Ukraine increasingly looks like they got their back against the wall, so they they will obviously respond to wherever they can respond, and these drone attacks has been relatively successful. So it just means, I think, for now that we are going to see a summer where energy prices price at the pumps will be higher than what we otherwise would have expected. I would say especially something like gas prices back above 30 euros a megawatt hour at a time where we're heading into spring, where inventory levels are already quite elevated. That we should have seen those prices at least 10 to 15% lower, but we're not, and that's probably due to those concerns.
Neil, we also have the recent data today out of China. China's Q1 GDP growth figures look decent, above the 5% target for the year. We've got reasonably decent oil import data for the first quarter for China. Manufacturing might look a little bit off, but ultimately China is proving to be a little better than the sort of early year headlines and adding some support to the energy markets. How do you think OPEC Plus is looking at all of this as they come closer to their big decision and meeting in June on when to unravel their current cuts?
Yeah, well, I've actually got the China GDP growth story from the FT on a screen right next to me as we speak. And I'm always slightly suspicious of Chinese official data. They set a target and surprise, surprise, they hit it or even exceed it. And that seems to be the case with these Q1 GDP numbers, which is not to say that, of course, there aren't signs, as you indicated in your introduction, that the Chinese economy is continuing to hum along, showing pretty steady growth. And if you then walk across to the OPEC Plus ministers, as you suggested, they will look at solid Chinese GDP growth. They'll look at pretty solid growth in other countries, growth markets such as India. They'll look at pretty strong economic underpinnings in the United States. And they will take the view, I think, that global oil demand growth in 2024 is going to be pretty strong. And the consensus view amongst independent analysts and the investment banking community is that growth will be in the region of 1.5 million barrels a day or so this year. If that does turn out to be the case, they will offset that outlook for demand against prospective growth in non-OPEC oil supply from the likes of Brazil and Canada, the United States, Guyana, and Norway is growing again this year. They will see that that growth is also fairly strong. So on paper, we've got a reasonably balanced market, which means that for the OPEC Plus ministers, they are unlikely to want to add more oil into the market later this year, unless the oil price does escalate further towards, say, $100 a barrel, and they go back to the old arguments that $100 plus dollars per barrel will damage oil demand and obviously undermine their market. So I think they will look upon the Chinese data, other economic data, and have a fairly sanguine outlook as far as the oil market is concerned.
Ali, let's first go to the survey question, because I would like you to also comment on that. But on the survey question regarding what phase in the process are we in this current Israel-Iran face-off that started on April 1st, when the Israelis, as reported, although they never acknowledged, which is their standard operating procedure, bombed the Iranian consulate in Damascus, killing many senior Iranian military officials there. What phase of the process are we in this current Israel-Iran face-off? Start of the beginning or the beginning of the end in that sense? Is this just the start of the beginning of this April face-off, or is it the beginning of the end? Will Joe Biden get his way, as he is calling, and many other Western leaders are calling on Israel to step down, or will Netanyahu do as he's been doing for 6 months now, sort of defying the Western world and going ahead with his own unilateral decision-making? Hence, you'd sort of think start at the beginning or beginning of the end. Joe or Bibi, I suppose, depends which one you believe, which one has the destination here. Ali, all things OPEC, I mean, putting aside all of this sort of fairly horrific geopolitical news and actuality on the Gaza story, which of course one cannot let it be overshadowed that the suffering in Gaza remains on a scale that none of us can really quite comprehend. But all things else in a parallel universe, oil markets are well supplied. This, sufficiently tight, as CEO said last week at the FT Commodity Summit in Lausanne, was generally a balanced but tightly balanced market. Your thoughts from a OPEC Plus perspective going deep into the second quarter now? Would you expect OPEC Plus to adjust strategy with all the factors currently in play?
Actually, I don't think so. I fully agree with Neil. I think the market is balanced, and there are some new, or not new, but old players, but they are increasing their production, and so this all will have some impact on OPEC decision in June. I think we need to understand that the market is quite tight, yes, and the demand for oil, it is going to grow according to some reports, including the OPEC reports itself. They are expecting the third and the fourth quarter of this year, the oil demand will go higher. But all that depends on if we believe on Chinese numbers and also Chinese growth, and also in India. So I think there will in June it will be a discussion, definitely. But if are they going to take any decision to increase the production? I have some doubts. If they have decided to do so, then I think from the voluntary cuts, they will start from there, and they will start doing it on a phases, and slowly to start getting some extra oil to the market, and wait to see what is the impact this extra oil will have next month. So it will be on a monthly basis review if they've decided to go ahead with extra volumes to the market. But I agree with Neil. I think there will be a cautious in June's meeting, and it will be a very difficult decision. If you put it in a percentage wise, I think the decision will be 50-50. Either they will go ahead and increase, or maybe 50% less. They will not take any kind of decisions. It depends about the situation in June, but overall, I think the market is very balanced, and there is no need any interference at the moment with the extra volumes coming from different places.
Ole, the bigger, I mean, one of the big factors at the moment, the outlook for inflation and the monetary policy makers. We were in the first quarter living with the expectation, starting in the early part of the first quarter with great expectations for a significant cut cycle to begin soon on rates. Now we go into the second quarter, and that's drifting further and further away. What bearing does that have on the commodity markets for the rest of the year, do you think?
Well, so far the impact has been relatively limited, actually, surprisingly, because obviously what we have been looking for was the seven cuts priced in at the start of the year. If they had materialized, we would see some restocking by industries who had been destocking, especially the metal space, metal sector for the last year. Now we're down to less than 2 cuts, and there's even whispers about rate hikes, which I don't believe, but we're back to square one on that front. But commodities generally have been doing very well anyway. We are seeing strong gains across all the sectors. I think the grain sector is really the exception. We still have an overhang of supply from last year's bumper crop, but we're heading into the next northern hemisphere planting and growing season, so that could create some upsets if the weather doesn't play ball. So generally, I think the market is encouraged by the fact that we have this pickup in industrial demand across the world. The PMIs, global PMIs, have been above 50 now for the past couple of months. And tied in with some of the tight supply we're seeing in some of these markets. We talked about oil here, which is relatively tight, being kept tight. You also have several industrial metals where tightness is becoming more and more visible. So generally, I think the market is going to. I think commodities are in for a recovery here. We've been sideways for more than a year. We're seeing a bounce this past month. I think that probably could continue in the coming months.
Even with higher rates?
Even with the rates not coming down to the extent, simply because it's also the fact the rates are not coming down. It's also a reflection that growth is potentially surprising to the upside, and that obviously ultimately is what is needed.
But on that point, I mean, you mentioned it earlier. I'd just like to get a further clarification on it. What does the gold price tell you? I mean, the rate staying up because inflation is proving to be sticky. The gold going up was telling me at least something, that the belief that the Fed would still cut rates because of the cost of debt on a sovereign level was just too overwhelming, regardless of inflation. And that's why we were seeing an uplift in gold. What are your thoughts on why gold is moving higher?
I think that's a really good point, Sean, because I think the gold market has actually moved from being supported by rate cuts to being increasingly worried about this very heavily indebted world that we are living in right now, and the risk of something breaking on that front. At the same time, there's no doubt that the demand from Asia has been extremely strong, especially from China, and that does obviously highlight as well that all is not well in China. The property sector is not the bedrock of savings as it used to be in terms of continuing to rise, and we also have there was also some concerns about the value of the currency, because just look at where the dollar yen is right now, 154. The Chinese competitiveness with some of these very weak currencies is not something that they will look likely to. So the risk of potentially some weakness in the renminbi also driving demand. So for now, it's driven by investors who don't really care about funding costs or interest rates. They're more looking for a safe haven at a time where they're concerned about multiple different developments.
Neil, I wanted to get your thoughts on the recent reports of the U.S. Senate turning its sort of some U.S. senators and U.S. politicians putting a sort of a dig into the IEA, moving away from it or moving outside of its mandate, etc. I mean, typically you would see U.S. senators pointing or use their swords to prod OPEC, but not the IEA. What's your reading on this? Is this just inside baseball politics in the U.S.? Is there something more here?
Well, I thought you might ask this question. Very simple. The work that the IEA does is carried out under the supervision of its governing board, and every 2 years the energy ministers meet and then set the program. So the work that the IEA is doing is not the work of a rogue agency gone off all by itself. It is carrying out the mandate of its member governments. Now, every single member government of the IEA is currently a signatory to the Paris Climate Change Agreement. The US was, then it wasn't, now it is. So it makes sense that the International Energy Agency will do research and provide analysis which promotes the agenda to implement the Paris Climate Agreement, and that is what it is doing. Now, you can argue against some of the work the IEA does, and I personally am strongly opposed to their view that fossil fuel demand will peak by the end of this decade, but that's a professional difference. I think the problem with the IEA's got with the Senate committee is that there are obviously members of the committee who are determined to attack pretty well every international organization which the United States is a member of. We've had continuous disagreements over the years with UNESCO, for example. There's a lot of antagonism towards the United Nations. There's antagonism from certain parts of the US political scene against NATO. So I think it's a wider agenda about the US involvement with international organizations. There is looking at the identity of the antagonists of the IEA. I think they're the kind of people for whom the IEA will never be able to satisfy them. They can look at as many pieces of paper, emails, receipts as they like. They will never be satisfied. And while I disagree with some of the work that the agency does, as an energy analyst, it's my professional view that they're heading along the wrong lines. They are not part of some kind of deep conspiracy which is trying to undermine investment in the fossil fuel industry. I think it's nonsense.
Right. Well, we'll wrap it up there. Brent crude oil trading at 90.35, up ever so slightly. Here we have 2-to-1, the start of the beginning versus the beginning of the end, which is a somewhat concerning viewpoint. We'll have to wait and see how that goes. In the U.S. Congress yesterday, we had the House voting to sanction China's purchase of Iranian oil. That passed the House overwhelmingly, and now going to the Senate. If that were to pass and have an impact on curtailing Iranian exports, of course, that would be bullish for oil prices. And then this week, we're also expecting the House to pass finally the funding for Ukraine, and which includes funding for Israel. But on the Ukraine side, it might be the money that the Ukrainian government needs to stop hitting refineries in Russia, which might be bearish. So keeping an eye on what the U.S. Congress is doing in this election year. Maybe
don't forget the Venezuela.
And the Venezuela, very good point. Thank you. Yes, Venezuela is up for expiry this week, tomorrow, I believe, and looks unlikely to be renewed. And that would be, one would think, bullish because it will curtail supply there. So a few things to keep an eye on: the U.S. sanctions, U.S. government legislation on all of these issues. But for now, thank you very much, Ali Al-Riyami in Oman, and congratulations in Oman, seeing the first Omani to take over PDO. Nice development. Mabruk to him and to all at PDO. Ale Hansen, thank you as always, joining us from Denmark, and Neil Atkinson from Paris. Great to have your insights today on this very important week. All the best, everybody.
Thank you very much. Have a good day.
Bye-bye.